Part of preparing for home ownership is understanding that it comes with some upfront costs. How much cash you'll need on hand to start this process depends on a host of specific factors, like the type of financing you're using, how much house you want to buy, and more. Some homebuyers will have way higher costs upfront than others. For VA buyers, the good news is they'll often need very little cash upfront, but at the end of the day, it really depends on your specific situation. So, given all that, let's take a look at 5 major upfront expenses that homebuyers might encounter. The first is a down payment. So the single biggest benefit of VA loans is that you don't need to come up with money for a down payment. Most other types of home financing will require one. It's typically a 3.5% down payment for FHA loans and 5% for conventional. So on a $200,000 home purchase, you'd need $7,000 in cash for an FHA down payment and $10,000 for conventional. Needless to say, it can take years to save that kind of money. Having no down payment is a huge benefit for VA buyers. Another common upfront expense is known as earnest money. When you make an offer on a home, you'll often include what's essentially a good faith deposit, and that deposit is known as earnest money. It shows home sellers that you're a strong and serious home buyer. There's no set amount you need to put up. It could be $100, it could be $1,000. Lean on your real estate agent and your loan officer for advice on how much to include with that earnest money deposit. Buyers can often get this money back if the deal falls through. Otherwise, it's often just applied to your down payment or your closing costs. Some VA buyers actually get this money back at closing. A third upfront expense is paying for a VA appraisal. Appraisals assess the value and the condition of the home that you're hoping to buy. These are required for VA buyers, and it's a cost that you typically need to bear upfront. It's also a cost you may be able to get back at closing from the seller. Now, appraisal costs really can vary by where you are in the country, but a good estimate is about $450 a cost upfront. Another upfront cost is paying for a home inspection. Now, you're not required to get a home inspection, but we urge buyers. We urge them to get one every time because home inspections and appraisals, these two aren't the same thing. A professional home inspector will conduct a much more detailed and granular look at the property. The home inspection can uncover defects and issues that an appraisal won't, and you can use those findings to renegotiate with the seller or even walk away from the deal entirely. Now, the cost of a home inspection will vary depending on where you're buying and some other factors, but expect anywhere from $300 to $500. Think of it as paying for peace of mind. The last big upfront expense we'll touch on, closing costs. Getting a home loan is going to involve some costs and fees. There are costs associated with originating and processing the loan. There are appraisals, inspections, taxes, insurance, and a host of other potential costs and fees. And these can all vary depending on the type of loan you're using, the lender you're working with, where in the country you're buying, and some other factors. You'll get a good idea of your closing costs fairly early in the process. From there, talk with your loan officer, talk with your real estate agent about how best to tackle them. You can negotiate the payment of these costs with the home seller. It's not uncommon for VA buyers to have a seller pay some or even all of these costs, but that's not always feasible. Every transaction is different, and you might need cash on hand to close. Communicate with your lending team early and often about how much money, if any, you'll need.